Guys, we're going to take a look at Nvidia. I want to show you guys how I would chart this out and where I draw out my levels. I think that this is something that's very important and really overlooked because a lot of people normally see how I post my charts, but they don't understand why I'm drawing them that way. So we're going to take Nvidia, we're going to go out to a weekly chart. I want you guys to start tracking your highs and your lows. So if we look, we can see that we have a low back here, we have a recent low here, we have a more recent low here. The most recent low that we have on this massive time frame is down here at $76. We're using the massive time frame first, and then we're going to zoom in. Now we have to mark off the most recent high that has not been taken out. We're not going to mark this high over here because price has broken through it. So that high doesn't matter. The only one we care about is right up here at $132. And we don't care about any of these lower lows because they are not recent. When we're drawing Fibonacci's or when we're looking at market structure, we only care about most recent low, most recent high. So now that we understand that these are the levels that we care about, we're going to take the Fibonacci retracement tool. We're going to go from candle body low up to candle body top. I don't do wicks personally. I look at the body. From there, we're going to pull it out and we're going to turn on. And now we're going to throw our labels up. The golden pocket is the 0.618 down to the 0.786. This level is what's called our institutional buying level. This is traditionally when Wall Street is allowed to start buying. The area that I really like to buy at is the optimal trade entry, which is the 0.826 level directly under it. This is going to be the make or break level. This is in most cases, you will see price bounce off of this level. Even if trend reverses, that level will usually hold. We can see that price has obviously sold off in the past couple of weeks, and we are calling the top back here at the end of June. People are calling us crazy, but the reason for it is that we were making lower highs on the BX trender. And you can see that the trend started shifting. Now we're making lower lows on the BX trender. And from the point of that occurring down to lows, that was a 29% drop within 42 days. If we were shorting this, take profit would have been the institutional buying level because we want to be selling while they're buying. Now that we have this set up, we can move into the daily chart, and you can see that it's the same exact structure. There's just much more candles here, which is going to give us a better definition of price action. Monday session, price opened inside of that golden zone, and what do you know? Big money was allowed to buy. That day got bought up almost 9% from lows to high. This is when the BX trender started turning green. At this point, we started making higher lows on the BX trender, holding this support, and it looks like now price is most likely going to continue to run. But we have one issue here. Short term, we are in a downtrend. If we turn on the market bias, which is one of my favorite indicators to use, we have courses on all of this completely free in the description. You can see that in most cases, price will push into the market bias before selling off aggressively. This is why I'm expecting price to push back into the market bias and reject somewhere between $112 and $118 before selling back off into this institutional buying range with worst case lows of $85 before earnings. The market bias on this bigger time frame is sitting right within the golden pocket. I do believe that the longer term trend is going to stay bullish, but it means that we have to see Nvidia hold worst case $87 in the next couple of weeks. Earnings is going to be the catalyst, in my opinion, that is either going to push us back up to potentially $150, which would be all-time highs, or break structure, see the bearish reversal, and from there push us down to $70. In the short term, I'm bullish up to about 114, 118, but I do think that I will probably open some puts if we hit specifically 116 to 117, because that's going to be much better risk versus reward, because from that point, that'd give me about a 20% downside or about 7% upside worst case loss. So let me know what you guys think. Let me know how you're playing this. Let me know if you guys think that this looks like crap or if you totally agree. And make sure you check out all of our courses. Links are in the description. Thank you guys for all the support. I'll see you next time.